Okay. Uh, what I'm looking for is not going to change. Good afternoon. Good afternoon. It's afternoon my time. It's morning New York time. We're using New York time to trade. So it's just around a few minutes past 2. Yeah. And yesterday was a beautiful stream. It was short, nice. Although we didn't get an entry. And yep, that happens. Still need to check out yesterday. I don't think so. But let's just take a spin. Yesterday, same time. It's yep. So this was yesterday. Delineated 8 a.m. usual. We printed London high, London's low. I was looking for London high to be swept. Then we'll have a rejection. I was looking for price to trade back into this 3 minutes bullish order block. Trade back, close below it, makes it now a breaker block, which is going to be a bearish breaker block. And I wanted market to come back into it, then we'll get continuation. And my target was just below this initial sell side liquidity. But price did way more than that. Even swept as low as going for London lows and beyond. So it's not going to change. It's just looking for the exact same protocols again. And I'll always prefer that London's high or low or previous session liquidity is swept after 8 a.m. I always prefer that. However, if it can happen before 8 a.m. But I would always prefer that I get this sweep during my window of observation, the time I'm observing price. But if it happens before then, we'll just see. And I'll take the range of London, draw the fib, at least. It doesn't have to happen all the time. We want the 50% of London price leg to be met, at least. If it's of the entire range, then we're almost there. If it's for the entire price leg, you can say we're getting there. Excuse me. And price is the market currently is above relevant opening times. We have midnight open here, we have daily open. So we are currently above. That puts us in premium. So we look for price to come down and trade into this initial sales at liquidity. But I wanted this sweep. I think the sweep happened just at London. So it's still like a valid sweep. Something I'm looking for it. Okay, yeah, New York. So it's like New York. So this is 7 a.m. New York opens for forex pairs. Also also for metals, and we're getting this wave. But I always want it to be in just after 8 a.m. Take that off. So outside, this is like an inversion FHA, very nice. This is the swing low for this price leg. That's the swing low. The price leg, swing low. Price traded into the inversion after we closed below it. Started selling off. We used this fair value gap. Nice. Well, today might just be for tape reading, and there will be no action. There will be no actions to call, so either way, that it's nice. I would mark out this breaker block and we'll see if we can still get a dip here, and that'll be more like it. That's if the market is going to kill us anyways, so good. Potentially this would be like, but let me look at it. I want to cover this inversion, and yeah, that's almost 2 hours. Yeah, looks fair, not bad. Move it aside. Look it up. Yeah, doesn't look bad. Doesn't look bad. Good. Choice statement. Love that. So we're taking the previous session liquidity, nice, which is London, and we're just looking for the pullback to the 50% level, and we almost got it. Like we just few points short of that. Look at this low. This is what at 412.7, and this is 412.5. We almost got the equilibrium of the old London price leg. So now we have engineered liquidity, or equal to whatever terminology you find. Yeah. Below. So watch and see. Okay, we have, this is gonna act as a 15 minutes inversion. After the 15 minutes inversion, we'll see. I would not want price to run these lows yet, but if it does, that is the market. Clearly, we're going to take this loss. You can see we're really engineering liquidity here. economic calendar right now using Forex Factory. We have no red footer news and we have no medium impact news. So we only have a bunch of low impact news from 9:20, 10 a.m., 10:20. FOMC members will be speaking respectively. So okay, it looks like we're gonna get now we have traded into the 15 minutes inverted fair value gap, and you can see the eye of that inversion is right here, is below this breaker block. So I want price to come into that. We have this breaker block, we have fair value gap here, which makes this a unicorn. So demand stands by the Dow. Yep. Yep, we got it. We have the broker block, we have a fair value gap, then I have this 3 minute inversion. So 3 sets of PDRs stacked together, and I have my stop loss just right above it. So we'll see how that plays out. on TradingView, it's perfectly traded into it, and on my MetaTrader, I just got to that high and it didn't tag me. What was that? Yeah, it's coming back. Didn't tag me. Well, wait, son. We have a new 15-minute candle now open. Right about now, I would want price to keep selling off. However, the irony of it is that I'm not yet tagged in the trade. So if I get a sweep of this high, but right now I don't want price to, if I was in the trade already, I don't want price to come and sweep this high and continue. For some reason I won't just want that. Right now I just want continue sell off. But yes, we'll get that high sweep. I will be in the trade now. I am in the trade. Yes, I am now actively in the trade. So good. Thank you for coming back to tag me along. So now it's just a waiting game. See if all of these ideas gonna play out. We have engineered liquidity below these lows, which is very nice. It's super nice. And I have stacked confluences of PDRs above those highs. Let's see if we are going to get the required necessary move. If not, it is what it is. Another day, another loss. But yesterday was good. So just let this play out. I'll grab a cup of water. Enjoy. So we are rejecting a trade. Rejecting this 15 minutes candle. I like that. We'll just see how all of this plays out. if we can, if the close of this 15 minutes candle is going to be below the midpoint of this inverse AVG, I would like that better. I mean, like, or outrightly we close outside of the inversion fair value gap. Makes more sense. It's more like you have more strength, or you have factors affirming that yes, you're on the, your position is not bad, it's good. Nothing is certain, everything is just, it's a game of probability. So naturally, what would I look for when I come to the market? I would mark out the London high and the London low, which is going to be a previous session because I'm coming to trade in New York. I'll look for a sweep and shift in market structure from a lower time frame, more like 1 minute. I used to use the 1 minute, but now I just use 3 minutes to be my least time frame. So I'm looking at the 15 minutes on the right side, and I have the 3 minutes on the left side, which is good. Let me measure out this. So 35.1. Yep, that's it. Come on. So that's gonna be the consequent encroachment of the fair value gap. So if you get a closure below that, yet the bro. Yet the bro. Well, delivery might be very wonky and not smooth. I don't know. There's no driver today. There's no news driver. Medium impact. Red folder. There is none. So I think all of this is just reliant on price, market delivery, and in less than 10 seconds we're about to close. Like I said, I would really want this candle to close below the consequent encroachment, and we did not get that. We didn't get that. And all I really want, yes, there's a sweep, nice, but like I said, I would have more confidence if we had the closure below the consequent encroachment of this inversion fair value gap. And also, if we're going to take cognizance or take notice, we actually traded into this 50 minutes bearish average. So we traded into this 50 minutes bearish average, or you could say balanced price range, because we have a push up and a push down. So this one like a BPR, maybe it is, I don't know, I don't care. Let me move this guy to one side. I'll just delete this. You know, that's the idea. That's what I'm looking at. So we'll see if we're gonna get the move. We're about to go into, from my time is another 15 minutes. It's gonna be 9 a.m. Then we'll have a new hourly candle formation. We'll see how the 1 hour is. You know, overall, it's just been massively bullish on gold. So I think I have too many lines. I'll leave this one. I don't need this one. I don't need this one. I'm working with this one. We're going back. Oh, I really wanted that consequent encroachment closure below it. So that's what it is. It is what it is. Tell you, this price delivery is very sloppy. Super sloppy. Super sloppy. Okay, we are on the way. Hopefully, we're on the way. So that's just the market, you know. It's gonna do what it wants to do, when it wants to do, how it wants to do. Ours is just to engage price accordingly and stack the confluences, you know, for the orders, stack the routine, show up every other time. If it's gonna happen, it's gonna happen. If it's not gonna happen. So, and this is an evaluation account anyway. So, and you know, I was really saying we were in premium because price is above daily open, and we have midnight open here. So New York midnight open right about here. So I believe we're in premium. So that's why I'm looking for price to trade on. And right now, I would mark territories where I want price not to, you know, yes, they could always trade into those regions. And from there, I would want price to continue to be bearish to sell off. That would be what I'll be looking for. An example would be price could trade into these consecutive up close candles and trade into it, no problem, but continue to sell off until we come to these lows. Ultimately, maybe we'll get to London lows, maybe. But anything around this region, we'll get this engineered liquidity. You see, like I said, could go back. This is the open of these consecutive up close candles. Come to this region, then sell off. That's one thing I'll look out for. And One more thing I would demand from this current 50-minute candle would be a body closure below this candle. Yes, I want a body closure below this current 50-minute candle. I would want that. It's just something I would demand from price for me to know that yes, price is heavy for bearishness. So it's just something I would personally demand from price. I want price to tell me, so that way I know yes, well, still much heavy and we're gonna sell off. My prerequisite or my parameters for the trade is very simple. It's nothing much. It's just from the 15 minutes to a lower time frame, 1 minute to 3 minutes. I'm fine by it outdoors. And I'll put that, let me put that here. Yep. Just put that here. Like I said earlier, I used to use 1 minute, but I don't want to go below 1 minute. Can be very, very noisy at times. Like, I don't. Let's just look at all of this in 1 minute. It's beautiful. Wow, it is beautiful. If I was using a 1 minute time frame, I would have gotten an entry earlier. I don't know, but 3 minutes is fine. 5 minutes looks, more neat, more clean. Yeah, this is it. I look for previous session high or low to be taken. Let's say previous session liquidity. Oops. I don't know. Yep. Okay. I'll look for a previous session liquidity to be taken later. Then lower time frame structure, and probably look for unicorn entry, broker block, whatever you do. God is messing with me right now. God is really, really messing with me right now. I wanted a body candle closure below this low, and that's just good. The market is gonna do whatever it's gonna do. And now it's 9 a.m. a new hourly candle. We can, we can get price to trade up, then continue downward. It was really going to get that bearish move. So it will be something like this. Be something, let me say something like this. So you trade up a little bit, then you give the continuation downward. But for real, there's just so many things that comes with the market. So many things comes with the market, and because you're demanding something from price, doesn't give a fuck about you, doesn't care about you and I, doesn't care if you put in your, I don't know, any money online. It's just gonna do what it's gonna do any day, anytime. Do I like the way we're trading up? Yeah. 1 bit. My stop loss is still what it is. I haven't moved it to break even, but if I really were going to get a continuation lower, then I want all of this to be a false move higher, then you continue selling lower. That's what I want. I think I just leave this on 1 minute, on 1 hour, and say I goes and see how price prints out on the hourly. If I'd moved my entry or my stop loss to break even right now, I'll be out of the trade. And that was almost a 1 hour displacement. This candle, this 15 minutes candle, I don't like it. Should have given me a body candle closure. Should have given me that body candle closure. That's what I wanted. But it is what it is, and we are going into the red zone. Into the red zone. Going higher and higher. Okay, looks like we're rejecting. Let's maybe not. Maybe not. If we're truly going to reject, then that is going to be a very massive 1 hour week. It's going to be a very massive week, you could see right from the open. It's going to be a very massive week. Right from the open. It's going to be a very long week. Then we have this continuation downward. Wow. If it's not going to be a massive week, then as if price is going to deliver bearish, then we're going to use the next 1 hour candle, 10 AM candle to sell lower, but I don't know yet. And my stop course it's just right about here. This is what it's closing in. And that will be it. Almost there. Almost there. It's about to take us out. Not us. Not us. It's about to take me out. But I'll take this trade any day, anytime. I like it. It was clean. It was what I was looking for. The entry we had, it was just very, very sloppy at the entry. Like 1, 2, 3, 4, 5, 6, about 16 minutes. No. About 20 minutes at the entry. I got tagged in here. So 1, 2, 3, 4, 5, 6, 7. That was about 21 minutes before we had that real displacement out of the entry and price started going in, giving the bearish price delivery run. But next hourly candle opened that wanted something on the 15 minutes, which I didn't get, and I wanted a body candle closure below this 15 minutes candle. I knew that closure was very, very important for the outcome of the trade, for it to be maybe a successful trade or not. Just take out all those lines. And I still have this bearish disinversion FVG because it was what I used for, as my yardstick of confidence into the trade. So now it might be a reclaimed level, a reclaimed PDRA. But if it was going to be reclaimed, it was supposed to have this closure above, come down, use it, and we'll continue pricing up. Just put this here. And now I'm out of the trade. It was a good run while it lasted, it was good. Like I said, I'll take this trade any day, anytime. It was like I'd want sweep, push down, market structure shift, get an entry, and that's it. And we failed to, and why I still took the trade was because we failed to reach the 50% of London price leg, which is something I would want. And why I always want that as a minimum target is because even if price is going to continue higher, if we can retrace at least to the equilibrium of the previous session leg, I would take off any entry from there. I'll take off any profit from there, and price can always continue higher. I would not always demand too much from price while I'm loggerheads and I'm looking for the entire previous session to be run up and below. Just like yesterday. Yesterday was good. It was clean. It was the same thing I had this marked out. I marked out the price leg as well, and I only aimed for the 50% of the leg. However, I did not get an entry on this one yesterday, so, and it really went, it really ripped lower yesterday. You could see massively. But that's it for today. We show up tomorrow. All of this is still intact. We have more engineer liquidity. This is relative to all of this, so I lock it in. Take it out. Do I need this one? No. Take it out. Yep, that'll be it. I would take a squint wrap of that and note it for another day. Reply. Okay, good. Same logic and protocol. Same logic, protocol, and thought process. And thank you.